Welcome back. This is Good Morning Namibia. Now, for the first time, the Central Bank, that's the Bank of Namibia, has issued clear regulatory guidance for potential investors looking to establish microfinance banking institutions or second-tier banks. This development will inter alia promote the growth of these institutions, which play a crucial role as far as advancing financial inclusion is concerned and also increasing access to banking services nationwide. Here to tell us more, Senior Financial Analyst, Mr. Hanu Moshilenga. Good morning, sir, and welcome to Good Morning Namibia.
Morning, Denver. Thank you for having me.
How are you doing on this gift of a Thursday?
No, it's a wonderful morning. Weather is perfect.
The weather is indeed perfect.
Yeah.
First things first, help us understand how this had come about, this directive issued by the Central Bank. What are the key objectives of this?
Okay, one of the key objectives of the microfinance banking determination is basically to provide secure and ensure that we have microfinance banking institutions that will be able to provide services to the general public, but then fostering also a secure and inclusive financial system, and this will empower individuals and also small and medium enterprises. And while doing that, we are also trying to ensure that microfinance banking institutions basically prudently run their businesses, and also making sure that they have effective risk management practices in place so that they safeguard the deposits that they will be receiving from the public.
Now, against the backdrop of those objectives,
yes,
what role will the Central Bank play to see to it that these institutions, some of which will only come about following this directive, do comply?
There's actually several requirements that are in the determination, and if you read the determination, it has very explicit requirements and expectations that are placed on banking institutions. But one of the main ones that stands out for me, which will ensure financial inclusion, is that microfinance banking institutions are required to have a 70% of their loan portfolio dedicated to individuals and small enterprises.
How will that be enforced? We do know that there's a continued need for greater financial inclusion. It's a noble cause,
yes,
right? But how will we see to it that it doesn't only remain a theoretical requirement, but actually gets practically enforced?
Yeah, thank you for that question. You see, the Bank of Namibia basically has a lot of tools at its disposal, and one of those tools that we have is an Eagle tax system, whereby financial institutions basically report returns, including information, and this is determined by the bank, and this is closely monitored by our offsite divisions. Furthermore to that, from time to time, the bank also conducts on-site examination, whereby we go to the banking institutions to go and actually see what they have been reporting on the system is actually going to be validated by documentary evidence during those on-site inspections.
And the Central Bank has that capacity?
Yes, we definitely
have that. For those in-person visits?
We do definitely have that.
Yes. I think at this juncture, Mr. Moshilenga, it's also important to draw a distinction between what is referred to as nationwide microfinance banking institutions versus branch microfinance banking institutions.
Yes. There are basically two main differences between the two. The first one is the nationwide microfinance banking institution. Basically, as the name implies, you will be allowed to set up a microfinance banking institutions across the country. So there will be no limitations in terms of how many branches that you will have. And then the second one is that we have the branch-based microfinance banking institutions. These will be limited to only having one branch in the country. And what further distinguishes these two is that for the nationwide microfinance banking institution, there is a capital requirement of 22.5 million, whereas for the branch, there's a capital requirement of 7.5 million.
What would warrant only allowing an institution to have a single branch? How viable would that be?
Yeah, it's basically, remember, most of the determinations that we set out, we do a lot of benchmarking across Africa with countries, like in this case, we have benchmarks against Kenya. We have also speak to some of our colleagues in Peru. So we try to see across the world what has worked best. And we have noticed that not all institutions have capacity to actually set up nationwide banking institutions. And also it speaks to the complaints that we have received as an institutions, where the public has complained that there's actually a barrier to entry to participate and compete with other banking institutions. So by allowing institutions to basically start with one branch allows them to scale up as they grow, and this also allows them then to formally join the financial sector.
Does that mean that I could initially be granted only a branch license?
Yes.
And then depending on how my operations unfold, how it is that I grow and scale, I could then subsequently be awarded a nationwide.
Yes, you can then, as your business grows and as your business starts to develop and as you acquire more clients, you are more than welcome to come back to the Bank of Namibia and then apply for a nationwide microfinance bank institution license.
Very well. You drew a distinction also between the different capital requirements.
Yes.
I would imagine that those are also not arbitrary. You also shared with us that we're benchmarking on Kenya.
Yeah.
It is important to import best practices, and we need not reinvent any form of the wheel.
Exactly.
What is the rationale behind the different capital requirements?
Obviously, the main one is basically not to find ourselves being bombarded by so many applications. So we also want to ensure that individuals that actually come to apply to the bank are indeed serious. And then also, why we also made a distinction between the two different capital requirements, it's obviously because when you set up a nationwide bank, microfinance bank institutions, obviously setting up multiple branches is going to be quite capital intensive. So you'll need to really have a substantial amount of capital that can actually support whatever business model you're going to start with. Whereas with a branch, the capital is not that high because it's going to be one branch, and we don't expect those type of institutions to be very complex or to be very capital intensive.
Talk to us about what is in place to ensure consumer protection.
Oh, wow. We actually have, this is actually one of the first determinations that we have under banking supervision that clearly articulates consumer protection clauses. And one of the main three clauses that stand out for me is firstly, microfinance banking institutions will be required to ensure that they treat customers fairly. Secondly, there's going to be an expectation that they do not allow clients to sign contracts that are incomplete or blank. And then thirdly, there's an expectation that before they grant any loan, they conduct an affordability assessment.
What recourse would a consumer have claiming that they've not been treated fairly, claiming that their rights have not been protected by this microfinancing institution?
Yeah, the Bank of Namibia, again, as I said, we have various officers that deal with consumer complaints. We have also a dedicated team that deals with consumer complaints. And whenever customers or clients of financial institutions find themselves not being treated fairly, they are more than welcome to make contact with the Bank of Namibia and raise the complaint, and then the bank will play the facilitator role between the bank and the client to see how we can remediate the differences between the two.
I would imagine, Mr. Mashlenga, that apart from not wanting to be bombarded with fly-by-night applications, part of the capital requirement rationale is also to ensure the sustainability of the microfinancing institution.
Yes.
What other measures are in place on the part of the central bank to ensure that these institutions receiving these licenses, whether it's nationwide or branch-based, are indeed sustainable?
Yeah, one of the most important one in terms of sustainability for microfinance banking institutions is that the Bank of Namibia has moved away from a compliance-based supervision to a risk-based supervision. Basically, this means that we ensure we identify risk on a timely basis, and then there is an expectation for financial institutions to address and or mitigate this risk. Secondly, most of the determinations that we draft in the Bank of Namibia are world-class. And the reason why I'm saying they are world-class is because we ensure that they are aligned to the Basel core principles for effective banking supervision, which is a global standard when it comes to supervision and risk management in banks.
Certainly my risk profile in year one may not be the same as it is in year 5. My risk profile when there's a global economic downturn will not be the same as when the Namibian economy is booming, right?
Exactly, yes.
So how frequently does the central bank, if at all, determine the changing or the agile risk profile of a microfinancing banking institution?
Yeah, again, as I said, one, using Eagle Tech, the bank keeps a close eye on the activities of banking institutions, because the banks, they submit monthly reports, they submit quarterly reports, and these are closely monitored by our offsite division. And when the needs arises based on whatever risk we might notice within a specific institution, that would then require an on-site inspection. However, we do not determine the risk profile of banking institutions. It's the business model and the strategy that the individual institutions adopt that determine their risk profile.
You just assess it?
We just assess it.
Very well.
And then once we have made an assessment of those risk profiles, like let me take the example of capital. We would then look at your business model, and then we were going to look at your capital, and then we're going to make an assessment to determine whether the capital that you're presenting is actually sufficient enough to carry the business model or the strategic intent that you're presenting to us.
If it's no longer feasible on account of the risk that you've assessed, do you shut the door of the institution right away?
No, we do not. That's not our intention of shutting down institution. But what we do is we closely monitor on a monthly basis and on a quarterly basis the activities of banking institutions. There are very well-drafted procedures and processes that need to be followed before you even come to shutting down an institution.
Thank you, sir. Thank you so much for your time. Thank you for sharing your expertise.
Thank you for having me,
thank you for the critical work that the Central Bank continues to do.
Thank you very much, Denver, for having me.
There you have it, Mr. Hanu Moshelenga, Senior Financial Analyst at the Bank of Namibia, talking to us about this novel development that the Bank of Namibia has issued clear regulatory guidance for potential investors looking to establish microfinance banking institutions in this country, whether as one single branch or across the nation. Good morning, everybody. We'll return after a brief break.